Hello and welcome. I'm David Robinson, online editor at The Banker, and today we're talking about central bank efforts to establish green stress tests and the possible implications for the wider banking sector, which is the cover story for the June issue of The Banker. With me to discuss this is Silvia Pavoni, the economics editor at The Banker. Silvia, let's start with the basics. What is green stress testing and why is it so important?
So it is widely accepted now that climate change has an impact not just on the economy, but on the financial system as well, as a consequence of it having an impact on the economy, of course. And so central banks have started to put their act together and actually attempt to begin to understand the intensity of this risk and the exposure that the banks that they oversee are under. And so we have the Bank of England and the European Central Bank, which this year will start the first inaugural stress testing exercises, very early days. And other jurisdictions are also considering this kind of exercise, including the US Federal Reserve.
Interesting. So to implement these kind of stress tests, what are the big challenges, Silvia?
So naturally, we do have quite a lot of data by now about the extent and the dangers, the implications of climate change. What is missing is actually the relation between climate change and the economy. So the implications for certain environmental conditions on the economy, or the implications of policies that are created to try and contain climate change on the economy. And this is exactly what both the Bank of England and the European Central Bank are trying to measure. So both are trying to understand the physical risks and the transition risks, the policy risks that banks will face. And that's actually quite challenging because this is not information, again, that we have. We don't quite have the tools to analyze it, but even looking at very specific and practical data points, such as, for example, the characteristics of a physical asset, the whether it has been changed to try and deal with extreme weather events, the conditions that this asset is under. This information is not something that banks would typically retain and collect, and so that's already something very practical that tells you the extent to which these exercises are challenging and what these central banks will need to overcome. Both of them, is interesting enough, actually have at their disposal a sort of a scenario put together by the Network for Greening the Financial System, which is a network of many central banks around the world, including the Bank of England, the ECB, the Fed, and other central banks.
Silvia, these plans, if they go ahead, will mean big changes. Will that result in new capital requirements?
So both plans are definitely going to go ahead. So we have a timeline for both. But because, again, it's the first time that these kind of exercises are being done, the official line is that, and I'm sure that this is actually correct, they're not going to result into capital requirements in a broader sense. But it's just natural to assume that at some point, once we understand, central banks and banks themselves understand a little bit better the extent of these risks, and they try to and improve the way that they deal with them and manage them, you can kind of guess that just as for the typical stress tests on banks that we are used to, and which lead to have an implication on capital requirements on a broader level for the whole system, these might also at some point lead there.
Well, Silvia, thank you. The development of ESG and green finance will obviously be one of the single biggest issues in banking in the coming years, and obviously one we will continue monitoring closely at The Banker.